Welcome back. So the market is still pretty much where we left it, 116 down on the Nifty. And as of now, the Nifty Bank is also steady, 180 points down on that index. Mr. Tulsin, I wanted to ask you about this little excitement that we've seen around sugar stocks and even sugar-related plays like Praj Industries. The stock is up about 5% as we speak. I mean, there's some talk about the higher MSP in UP, but otherwise, I mean, is there any price movement at the retail level on sugar? Do you see the rally resuming?
See, Surbi, I don't see any realistic or maybe fundamental reason for the sugar stocks to move up. And coming specifically on the Praj Industries, again with the crude having ruling so low at $55 or maybe $54-55 per barrel, I don't think that there is, though the ethanol policy is already in place, I don't think that there will be any kind of derailment in procurement or lifting by the OMCs, to meet the 10% deadline for the current year. But why anybody will be aggressive in going for the distillery setup for next year? That's number one. So why there should be any positive bias building up on Praj Industries? Coming specifically on increasing MSP, that is possible because right now the MSP is at 29 rupees, and even if you are asking for a 12% increase, which is unlikely, but when the crushing is on, while this crushing will remain on till end of April, and generally during crushing season we don't see the sugar prices moving up. So asking for 12% increase, that is about maybe 32 rupees 50 paisa seem to be far-fetched. Government unlikely to consider that this increase in the MSP. They will allow this to leave it to the market forces to discover the prices. Right now in UP, the sugar is sold at 30 rupees, 31, closer to around 31 rupees, plus minus 50 paise. So I think that will take care because the export, whatever has to happen has happened. Ethanol is seen to be giving them good this one. So overall, say sugar mills have to remain contented within the existing free market mechanism only, and I don't think that any kind of increase in MSP will be seen, and there is no reason for positive bias to be taken in case of Praj Industries on the ethanol story.
Okay, fair enough. Amidst all this, news flow, Ujjivan is one stock which has managed to hold out through the day-to-day. In fact, even right now, trading closer to the high point of the day, 4% higher. And Prakash, it's done well from its recent lows ever since the day when Urjit Patel left. It's done well. Your thoughts on the stock? And in fact, Equitas is at the low point, but Ujjivan is at the high point.
Yeah, so it seems like the market likes the plans that Ujjivan had outlined just before. Anecdotally, the change in the RBI leadership happened. And that probably is something which they believe could go through. It's the same thing with Bandhan Bank as well, if you look at not maybe the same ferocity that Ujjivan has had in terms of the bounce back, but Bandhan also seems to have kind of been rated as having got out of the woods. But on this segment overall, Anuj, the way the environment right now is we're getting into a little bit of an pre-election mood. MFIs typically don't tend to see very productive growth, which is at reasonable margins and quality, of assets. So I think you have to kind of stay away from that, and their cost of funds continues to go up while they are competing with the banks at one end and with the MFIs on the other. So they're actually caught between these two models, and it'll take a while for Ujjivan and Equitas to really emerge as great picks from now.
Okay, fair enough. By the way, just take a look at Page Industries into the chart. Now, a lot of people believe perhaps it is one of the most expensive stocks, of course, but some valuation correction which is needed and down about 4% right now. Mr. Tulsian, you've had negative view on Page Industries, of course, well documented, but you think it needs to correct more?
See, Anuj, even now it is ruling at a P multiple of 55, 56. I'm unable to understand, and you see the kind of growth the company is posting, that to about maybe 20% growth. And if you take the revenue breakup, 1/3 of their revenue is from the trading turnover, which is in fact giving more. I'm not saying that one may say that the purchase of stock in trade or maybe trading turnover is seen incidental, but that seems to be giving them the better margin. So I don't think in this scenario, when you have a bottom line growth of about 30-32%, okay, you can afford to give a P multiple of 50-55, and that to the revenue mix. And in respect to the women's segment, new launching, that always have a pressure on the margins because of the higher ad spend and all sort of things. So I still maybe the stock will not. And as I said that, a while back, that the problem is that PMS is seen to be sitting a lot in these kind of stocks, maybe like Eicher Motor and Page Industries. And in fact, we have been continuously seeing the liquidations by them. And when the PMS starts selling them, they act like maybe DII or maybe institutional investors. So that selling pressure, nobody is coming to buy the stock at the current level. So maybe it can further correct by about 5, 6, 7%, allow it to settle at 20, 21,000, where the proper valuation or the renewed buying may come in.
Okay, all right, Mr. Filson, take your point on Page and of course all the other stocks that we've discussed. Thank you very much for being with us and sharing those anecdotes today. On that note, let's just go back now to a couple of the technical conversations. We have Jay Bala of Cash the Chaos joining in. Jay, good afternoon. Season's greetings to you. Wish you a very happy 2019. Now, I remember before you left for the Christmas break, you did say that, you're expecting the rally, not just in India, but a global rally to resume. It's early days. We're not seeing evidence of that just yet. But for the Nifty, what do you expect in 2019?
Yeah, a season's greeting to you and the team in CNBC TV 18. There's no change in that view for Nifty. Nifty is behaving like a haven in the market, and it's quite resilient. And it looks like a lot of funds are moving their allocation towards India, and probably that's the reason why it's holding up pretty well. And going forward, I would think that the 10,333 low the markets made post the election results, that's going to hold up, and I have little doubts about it. And if you look at the banking index, 27,136 on the banking index was pretty important for me. We categorize markets based on the number of steps it takes to move up or move down. So given that, if a market moves up in 5 steps, it's a trend. If it moves in 3 steps, it's actually a counter trend. So, we look at overlaps for the markets too. So in that sense, 27,136 on the banking index is saying that October low is a very strong low, and the probability of that breaking, be it the Nifty or the Bank Nifty, is quite low. So the Nifty is behaving very, very strong, and I would sense that even the 10,333 low will not hold, and maybe even the 10,600 level that we are very close to right now, when that might even hold up.
Okay, that's interesting. Jay, hi, good afternoon. Thoughts on Reliance? That's the one which has really led the market lower ahead of its numbers, of course. But chartically, how's it looking?
Yeah, Reliance needs to go past 1,300, but in the short term, it's consolidating in a range. And yes, it has been a slight, kind of a short-term misbehavior, I would say. But you got to take what the markets are giving you, and I would still hold on to the view that it's bound for 1,300. But I don't think the 1010 low it made in October is going to be tested, even come close to it. But I would think the current lows are very close to a higher low for the stock. I would expect the trend to resume probably from a 1 to 2 day time frame.
Jay, those who believe in technicals always say that the price moves ahead of anything else, any other indicator. So therefore, on the auto sector, where charts have been smashed out of shape, do you see bottoms forming? Would you start recommending buys on any of these? Eicher Motors, on Ashok, Leyland, on Maruti for that matter?
Yeah, Maruti is a very interesting case, and I'm a macro trader. I look at cross-market currents, and from that sense, if you look at the USD yen, that's a very interesting trade setup coming up. I think the yen is going to put up a very strong top around 107, 108 level, and then depreciate somewhere beyond 127. And if you talk to some of the fundamental analysts, they'll tell you a 1% drop in the yen is actually a huge positive. Maruti's operations in India is about 25% is yen denominated. So watch out for this. That's going to be an interesting move. And the recent pullback that you're seeing, I'm classifying it as a pullback in Maruti, is actually a higher low. It's going to be shaping up in a very important fashion. I told Prashant and Sonia last time that once it closes above 7,800, it's going to go back to at least mid 8,000, probably even 9,000. So watch out for it. It's probably coming close to an important support. A slightly different setup, but a very interesting setup is shaping up for TVS Motors. So as long as it holds about 525, 500. It's going to be a very important and very interesting pattern. I'll probably be a buyer in TVS Motors and Maruti. Probably I'll probably start putting in a staggered fashion, even at current levels.
Fair enough. What about IT, Jay? Especially names like Infosys. They've done well for the market all through last year. TCS was one of the top gainers. Any more steam left here, considering that perhaps the rupee tailwind might be over?
I don't think so, Anuj. I know I don't know what's the consensus view on the rupee, but I'm expecting record lows for the USD INR pair, and I'm expecting it to cross 76 to 78. And if you're a currency trader, I think 68.5 on the Indian rupee will not be printed. So that can be your stop loss, and you can go long on the on USD against the INR. And from say 3 to 6 months time frame, I would expect record lows for the Indian rupee. So that's probably going to give the tailwind, and that need not be the reason why I'm actually positive. That's actually an additional reason. Around 20th of November, when I had a conversation with Surabhi over phone, I said that was the last few days of selling we're going to see for the IT stocks, and the markets have bottomed from those levels exactly. And TCS and I also said that this leg of the move will be led by the frontline IT names, not the mid-cap IT names. You got to be very selective if you're going to choose mid-cap IT. And I'm expecting Infosys to cross 750 to 800, TCS to cross 2300. Maybe if it's going to be a strong set of numbers in the coming days, which I think it could be, I'm expecting it to touch even 2700. And on the mid-cap, I'm very positive on L&T Infotech. I'm expecting it to take out record highs past 2200.
Okay, by the way, 3 p.m. move on the Bank Nifty. The first tick is on the downside, 26,977, 980. But not by much. It looks like perhaps, that's really the equilibrium around 27,000. So, like we discussed, it's not too much perhaps around the 27,000 mark. So that is it for now. It looks like, of course, sometimes that move takes place after 3-5. So keep an eye. But right now it looks like the 3 p.m. move perhaps is not happening.
Okay, it's all quiet on the Nifty Bank for the time being. There's an important story that's breaking on your screens. Our colleague Parikshit is picking up from highly placed sources that this universal basic income scheme is being discussed at the highest levels, but there's no clear decision as yet because of the cost factor, also the execution. So the government machinery is really weighing out all options, and there could be a different package of relief, perhaps of sort, that could be given out to the farm sector. We'll try and get Parikshit in a minute to get more details on this one. But Jay, let's talk about then ideas for 2019. You've already given us several, and we're talking about beaten down stocks like TVS Motors, Maruti you mentioned. Anything else that immediately comes to mind where you'd think of going ahead and buying?
No, you must have an investment portfolio and a trading portfolio. From a trading portfolio perspective, I would look at stocks which have been beaten down from a longer term time frame. So from that category, BHEL qualifies. If you look at the stocks movement from the 2017 highs, it has declined in 5 steps. So basically, and the low has come up with the momentum disagreeing with the low. And there is a strong possibility that what we call under the elite wave model as a truncation. BHEL could have seen a truncation slightly above the 61 mark, and it's probably going to take off to somewhere close to 120. So I'll place a stop below 60 for BHEL and be long from an investment time frame of about say 4 to 6 months, maybe slightly longer than that. And the second one I have is is an IT stock once again. It's Cyient, and Cyient has come to important support levels. I would expect this stock to reclaim 900, but whenever this has come closer to the 580, 575 mark, it's seeing strong buying. So probably indication of some investors seeing value around those levels. So place a stop below 575 and expect it to touch about 900 to 1,000.
All right, Jay, we'll leave it there today. Thanks a lot for your time. That's a word from Jay Bala. By the way, somewhere around this time yesterday, JDAV started to collapse. And once again, it's having almost similar trend. Just pull out that stock intraday. What is interesting is, again, 6.5% gone on that stock. Pull out the futures plate. It's shorting like the abandon here on Jet Airways. To 13 rupee discount now opening up on that one. Prakash, taking a flight here or buying the stock here?
No. I think Indigo still continues to give that comfort. Jet has been a big disappointment personally for me.
Yes.
From the time that I had started, building a little bit of promise around it. And, things have just not come to a stage where they could kind of get repaired, So it's right now absolutely not in that hope zone. Unless some acquisition discussion starts taking some meaningful shape.
We all make errors, right? So and I thought at one point that perhaps Jet Airways was finally
moving to a different orbit.
I think they've really disappointed. I think at a time when crude oil prices were so low, when everything was going in their favor, I think this really has to go down as the biggest disappointment of the last 1 or 2 years, frankly speaking.
I see why you're saying that. Yes, absolutely. It's just airline operations that completely went out of whack. Not that aviation is ever an easy business to be in. But anyway, speaking of businesses which are having a bit of a challenge ahead of themselves, commercial vehicle sales are the talking point, and Ashok, Leyland posted a weak set of numbers for the December month gone by as well. The company saw a 20% dip in total sales for the month. To discuss this and future trends, we have Anuj Kathuria, President Global Trucks at Ashok Leyland, now joining us on the phone line. Mr. Kathuria, good afternoon. Thanks very much for joining in. Now, sales for December were about 1,000 units short of analysts' expectations. What has been the reason behind the sluggishness? And more importantly, is it just a temporary blip or is this going to continue?
See, December we got a number of around 10,000 plus units for M&HCV, and it's actually not a fair comparison if you do a comparison with last December, because last December, especially the trucks, because of the blower code that was coming in, had a lot of pre-buy. But if I compare the quarter 3 numbers, quarter 3 last year, the total volume was around, for trucks, was around 90,000 was the total industry volume, and this year it is around 85,000, so not very different. What we saw in the first half of the current year was a huge, the second half of last year was very good, and that trend continued into the first half of this year. So, but quarter 3 also, as compared to last year, we were almost similar numbers, and quarter 4 of last year was even better than quarter 3.
Okay. Anuj, hi, good afternoon. So given the recent sales trend in medium and heavy commercial vehicles, what is your expectation of sales in Q4?
Q4, we expect the numbers to be quite good. Basically, what has happened is that Q3 we had seen a sharp increase in the fuel prices, which have now settled back. They have come back quite a bit. There was also certain challenges around the liquidity, especially when it came to the funding from the NBFCs. We expect that maybe, many of the goods that were in the 28% GST bracket, some of them have moved to 18%, and we expect further also some movement in the January GST Council meeting. We expect some more goods, especially cement, if it moves to the 18% bracket. So that will push the demand for movement of cement. So we expect that the demand would be quite good.
Mr. Kathuria, can you put a number to that, sir, for the fourth quarter in terms of volumes? What should one expect from Ashok Leyland?
The industry has had a growth of close to 25% till date. But if we even get the same numbers as we got last year in Q4, I feel that still we will end the year with an increase over last year. And last year, as you remember, was the highest ever for the industry. So this year we are going to see a new high. In terms of the industry volumes, till date we have a growth of 26% for the first 9 months. And if we were to get the same volume as what we got last year Q4, because last year Q4 was phenomenal. So we can expect that we would end the year at somewhere around 15 to 16% growth over last year.
Okay, has the axle norm issue impacted sales of heavy vehicles?
Axle load, basically when it was announced somewhere in July, initially there was some confusion around it, but that has settled in. Most of the people, most of the operators have been able to get the vehicles now being operated as per the new axle load norms. What has happened is that what it has done is that some of the segments, the vehicle requirement has changed. Like, to give an example, earlier, wherever we were using a 14-wheel vehicle or a 37-ton GVW vehicle, now for certain applications, we have now moved to the 12-wheel or the 31-ton, old 31-ton, which is a new 35-ton. So there has been a shift in the product requirement. And definitely these vehicles are now carrying close to 20% more payload as compared to the earlier days. So definitely they are taking more load, but then there are certain applications where it was never the payload that mattered, it was more of the volumetric load, or even on off-highway vehicles, this will not have a major impact. But definitely on long-haul vehicles, especially the multi-axles, it has had an impact to some extent.
Finally, again, just checks from the ground. There have been reports, Mr. Kachuria, that operators have been under stress and some are thinking of cutting down fleet sizes and whatnot. Are these correct reports? I mean, is there a worry on ground?
See, if I see the total industry volume, the volume for December also was more than 30,000 trucks, which is quite good. In fact, while we also hear from some operators that the things are not as good as they would like it to be, but the demand per se is not bad. Two segments where the demand is much better than last year. One is in the tipper segment, primarily driven by all the infra projects, mainly road construction and all the other metro projects, the flyovers. And, every city has a lot of construction activity going on. So that is one. The other is in the intermediate commercial vehicle segment, which is the 7.5 ton to 15 ton. There, the demand is quite robust. In fact, after GST last July, the hub and spoke model has kind of, got into place. We have seen good growth in both tippers as well as ICVs. And that we expect it to continue going forward.
Okay. All right, Mr. Kachuria, we'll leave it on that note. Thank you very much for joining us. That's the word from Ashok Leyland. Let's see if those numbers indeed start picking up over next month. Quick break right now. We'll come back and get you the trading ideas for the last 20 minutes of trade.